Hello everyone, welcome to ICM Academy, introducing trading secrets for Indian investor. This is Sai Mahesh with you. Today we're going to cover how we can help Indian investors to diversify their investment from the stock markets to the forex markets. So before I begin, I'd like to inform that all the opinions, analysis, news, and information mentioned on this webinar only serve for the educational purpose and should not be taken as considered a signal whether to buy or sell any financial instruments. And ICM does not provide any instrumental or investment advice. All right. So today topic we are going to see a basic something about financial markets, since it's all about stock markets and forex markets, and where we go and jump into the major topics like how we compare the stock markets and forex markets, then how to choose a broker, and what are the features available with the brokers to facilitate your trading platforms. All right. So I'll take this for an hour today, and you can raise your questions in the end of the session. Do you have any questions? I'm happy to help you. And moreover, we have now upload these videos on our YouTube channels. You can go and have a look on it. All right. So today, let's we move on to a topic. What is the financial markets? I'm going to brush up like a small couple of minutes about what is financial markets. It's help you for the people who are beginners or newcomers or new traders, which can help you how to compare the markets and what are the financial markets basically. So what is the financial markets and what are the few concepts you need to know about financial markets? The major asset classes are there in the financial markets, which is called like indices, stocks, fixed incomes, commodities, forex, and cryptocurrencies basically. When you say about indices, it's nothing but it's an indices crack of piece of group of shares. Basically, you might be knowing about many exchanges are like Bombay Stock Exchange, National Stock Exchange, or we can say US markets like DAX, or you can say Dow Jones, Nasdaq, S&Ps, FTSE. So they are major indexes. This is also one of the financial markets. When you come into the stocks, it's also known as equities or shares. Obviously, everyone knows about it. So when you trade in stocks, your investment is the individual company, whether listed in a stock exchange, familiar with many stocks available. So you have list of stocks, we can be able to participate to buy and sell any stocks as per your certain analysis. And coming to next is the fixed income. Fixed income refers to any asset that pays you the owner to set a regular interest payment. The most commonly we can say bonds, or we can say numerous type of fixed incomes are available in the markets. Like maybe we can go for interest rates based returns from the banks, from institutionals, and many other institutional available for that fixed incomes. And coming to the forex, so obviously forex is nothing but currency trading exchange platforms where you are allowed to trade and buy and sell in a world currencies. For example, dollars, euro, pound, and many other currencies are there. We're going to cover all the information in the coming up slides. And commodities, obviously, you can see the commodities, which is one of the popular like precious metals like gold, silvers, and copper, or you can see other commodities like soft commodities, hard commodities, or you can say energy products like oil, natural gas available. And another one is the next one is the cryptocurrencies. Obviously, everyone knows is a very popular, where mostly we can say is a cryptographic. It's not exactly instead of by central bank, but still it be considered very popular. One of the popular cryptocurrencies is a Bitcoin. So these are the major financial markets, the key assets where you can be able to trade on financial markets. Let's move on to the next, which what are the factors that affect this markets basically? Two major factors we can say. One is the supply, and another one is the demand. So you can say when you say each asset will have their own unique factors to affect the markets. For example, like fundamental factors are there. Forecasting the fundamental factors, the principle of major on supply and demands. Supply is how much the financial markets are available to purchase. If a lot of people want to buy something, when your supply is limited, the price obviously will rise. Right? If supply rises but demand does not, the price will be usually falls. So exactly the demands and supplies works. In this case of supplies, when there is a lesser volume of the price, we can see the price and hikes in the markets. So when it coming to the demand is how people are trying to buy the financial market. If the demands of the market is low but the supply is high, price will drop. Again, the vice versa case, when the demand is then rises, obviously the supply does not, the price will actually rises. So exactly. So the major factors of this fact. So I'm just going on this. The major things of what we can see on the major news which affect the markets on the generally on the financial markets. News is many markets participate keeps on tabs with a positive negative headline. For example, flash news comes in the markets, which also affect the a quick drive of the supplies and demands and down. And talking about the central bank policy is one of the major important things because central bank has interest rate changes on a regular basis, which also a flow of money which around the world, which limits the impact on the demands of the supplies and demands. And coming to the next is the government data. So government at least can affect the demand and supplies. Obviously, like unemployment informations, inflation data. For example, you take for like money flow, or you can say about employment information, jobless, payrolls, everything can be affected. So these are the basic about the financial markets, where what are the markets involved, how it's been affected. So where we can trade, who are the traders in the financial markets? General view about this is first is like institutional investors. We can say pension funds, asset managers, mutual funds providers, or we can say other financial players in the markets. Next is the bankers, who has huge fund players like we have central banks and other institutional banks are there, or the major funds who have been financial markets who can be traded in this. And next to the brokers, place the orders in behalf of clients, usually retail brokers, hedge funders, or we can say institutional clients, institutional traders are available. And the fourth one we can say is the retail investors, or more of very heavy volume. Recent times you can see because retail players have been participating in these markets very hugely, which affect the major things of the markets fluctuations and movement everything. So these are the major players who have been trading in the market for years and years. So where we're going to move on to the next, where like you can see about what are the major stocks. Best we're going jumping to the major topic today: stocks and forex markets. So when you say, let's understand the difference between the stocks trading as well as forex trading, because there is a huge debate between the stocks trading and forex trading. Why so? That's most important thing. How to compare how to take a decisions, or how to diversify your investment from the stocks to the forex industries. So when you say about like, let's start with the what is stock markets? Yeah. So marketplace where the investor buy and sell the shares of publicly listed companies. Obviously, you know that you buy stocks, you wait for some time. The stock is a collection of markets basically. When the stocks are bought and sold, when you buy a stock, basically the purchase a small part of the company or became a shareholder. As the company grows or earns profit, you can have the earned dividend based on the shares, obviously, right? So, for example, take for Indian market scenario, the two most prominent exchange are Bombay Stock Exchange and National Stock Exchange. When you buy a stocks, you are buying a small portion of the shares in the company. If a company does well, it earns your profit. The profit is the dividend monitored amount. It's the dividend among the stockholders. According to the number of stocks you purchase the particular price. Your profit is the stock depends on your stocks which you hold. Exactly. So when you're comparing to the stock market or forex market or something, or maybe you can say if you're having a companies performing well and your the large stocks are invested in the particular certain stocks, however the company is not performing, obviously there will be a lack of a downside fall on your trading or maybe in your portfolio management. But the stock market is always stacking of a huge volume of trade, like 200 billion trade every day on average. Consider lesser than the forex market, but still there are huge volume trading happens in the stock markets. Okay, what is the forex markets? The forex markets is a marketplace where the banks, central banks, brokers, companies, traders, exchange, and currencies are being traded. Forex market is also known as a foreign exchange market. It's the largest financial markets in the world. Basically, it works as a trading in an electronical way, where it's connected with electronic networking with the banks and other brokers and commercials, companies and traders are available in it. So when you say forex market, there are two major pairs, or we can say three, we can say kind of players, or maybe the currency pairs are available. Because in forex market, everyone knows about the major currencies like dollar, pound, euro, Japanese yen, Canadian dollar, something like that. So when coming to the pairs, there are three kind of popular liquidity managers are there. One is major currencies, next is the minor currencies, second, third is exotic currencies. So what is the major currencies? Major currencies is the most active traded currencies. For example, like it's 80% of the total the forex volume is created by the major currencies. So they typically as a less cost to trade compared to the minor currencies, because minor currencies has some kind of volume. In case of trading volume or liquidity, it will be less compared to the major currencies because they have not much volume being created on the particular currencies or based on the cross currencies. So when you say about the minor currencies, let's move on to the major currencies. What are the major currencies? So major currencies are Euro USD, or you can say Japanese yen, you can say British pound, Austrian dollars, Swiss franc, Canadian dollar. These are the major currencies. And also there has a shortcut or nickname for each and every major currencies like Euro USD, USD JPY, which is always called a dollar hen, cable, which is also can be called as a British pound or a cable, or we can say Aussie, which is also AUD plus slash with USD, or we can say Swiss, which is the Swiss franc currencies, and Loni is also a Canadian dollars. So these are the major currencies. We can see a huge volume of trading. As a beginner or a trader who like to choose from the stock markets to trade in forex markets, these are the best pairs or major pairs we can take a chance to test yourself, to practice yourself to get into this kind of currencies. When you compare to the major currencies, minors are available. Minors, while the major currencies pairs make up most of the markets basically, but we can't ignore the minor currencies because minor currencies is also a contribution of the major markets. Like for example, Euro JPY, it's a cross currency. This is all with against dollars. That's what the major currencies. If you say a minor currencies, it's all against the other currencies to cover. For example, Euro is JPY, Japanese yen, Australian with New Zealand, or you can say Euro currency with the pound, British pound. So spreads are for minor currencies pairs are often wider compared to the major currencies. Spread is nothing but the difference between the buying and selling. It's quite wider compared to the major one, but still you can I can use a buying and selling opportunity because it also has a huge volume of trade momentum and volume creations that haven't happened compared to the major currencies. When you come to talking about the exotic currencies, also one of the major feature which you can populate currencies available, but still compared to the major and minor, exotic currencies also are rare currencies, which also we can say not much volume created, and it can also like pairs which can be compared with other common trading currencies. So we can choose, for example, for Australian dollars with Turkish lira. So these are the exotic currencies. So there are three patterns of currencies pairs available, like major, the minor, and exotics. So you can choose a major initially for the trading, which can help you to understand, to know all the potential of the markets and stuff here. So the good rule, it's like forex. It's focus on two major currencies. Obviously, generally choose a trading with Euro USD, USD JPY, GBP USD, because there's a most much information source available for underlying the economic involved and easy to understand in case of any impact happen in the market or any kind of news comes in the market, easy to understand. So this is the best way to begin with currency trading. So let's move like how this forex markets moves. What are the factors as is discussed about the stock markets? So what are the factors affect for the forex markets? Quite similar as like a stock markets. Basically, in a stock markets, what we understand that the majorly about the company stock, companies' informations, balance sheets, any news about companies or any other impact change on central bank or something. But when coming to the foreign markets, almost same, but I can give you small information how exactly the impact happens here. One is that like is economic data. So economic data is what do you mean? Understand that the currency tend to the economic health or we can say the critical economic data, which like inflations, unemployment numbers, or foreign trade, payrolls, or we can say consumer sentiments, or we can say purchase price index. There are many data available, and then under the time of particular markets move. So each country has a different economic data. So it depends on the data release, the currencies fluctuation will happens, buying and selling happens in that. So next one is that like it's a central banks. Central banks also have a big influence over the performance of the currency. Obviously, because when any rate change happens with the currencies, I mean the rate change happens interest rate. Obviously, the big volatility will be there in the market. For example, changing the rate of interest rates or printing the more money by the central banks. This also impact a certain level of the market's movement in the currency markets. And third one is that politics. So, in case increasing political uncertainty can also drive the markets very volatility. Because for example, take for US dollar, for example, it's also safe haven currency for any investors. But thing is, like in case any change happens at the political level, like elections or any other kind of information comes up politically, definitely that will affect. For example, financial minister speech that will affect, or any kind of financial head people speaks about the financial condition of the particular country or the currencies. Obviously, that will impact the market. So these are the major move that markets moves the markets with the currencies. So let's move on to next. Here the key thing what we're going to discuss today, the key difference between the forex and stock markets trading, how to compare, how to take a decision as per your convenience of the markets, your time and everything. So here I have been explored like forex market and stock markets here, and we have taken like 7 highlighted point here how to compare the stock and forex markets. First one is that like asset to trade. Obviously, when you're coming to the forex markets, so you are going to trade currencies, forex currencies. Stock market is nothing but the shares or units ownership in a business. So when you say asset to trade in a forex market, you trade foreign currencies, obviously. So traders speculate based on how one the currency performs against other. For example, euro, West, dollar, right? These are major currencies. And coming to minor currencies like euro, West, pound, British pound. So which can be reflect on economic health with other stability, which shows on a primary asset of which currency you're going to buy and sell. So obviously you're going to trade on a currencies instead of buying a stocks. On the other hand, when coming to the stock markets, the primary asset of the stocks is it's all about the stock market shares, which you're going to invest in a company, and when the price goes up, the company stocks value goes up, it makes money. So that means the dividend you get out of it. So this is a major thing. So you know what is the asset to trade on the forex and stock markets. Next important factors or the key point is that trading hours. So when you're coming to a forex markets is obviously like 24 hours. That's from Monday to Friday. And coming to stock markets, trading during the opening hours, it depends on which exchange or which stock exchange you'll be trading. Will be limited on that. So as mentioned earlier, the forex market operates 24 hours on a 5 days a week. It starts, for example, from the Australian markets on Sunday because around the clock it trades. So Sunday and evening or night, it start the Australian markets or Wellington markets start from there, and there to Sunday evening and close in the New York markets on Friday. So it's mean that from Monday or Sunday evening to Monday, or we can say Sunday night, Friday night till the US markets close, you can trade. So you have the opportunity for trading all 24 hours round the clock, which give the more opportunity for the trade for the timing on the depends on available on your timing. So this round the clock operation, it offers like flexibility for the trader to round the world, allowing them to trade in a normal business hours or engage in trading activities. Because if you are busy on your work or busy on a job or something like that, your flexible time maybe after evening time, because most of the market volatility will be there in the evening US markets time, because a lot of economic calendar reports and information comes for the traders. You can see a lot of momentum happen in the market, so you get an opportunity to trade on that. So when coming to the stock markets, controversially, stock market has some restrictions, obviously, because when you say limited time there, situations are there because standard business hours of the country or maybe the exchange where you're located. For example, take for Indian markets, it starts from 9:45 and ends at 3:30 in the afternoon. So they're the limited are there. But when you're coming to the stock forex market, sorry, so you have a 24 hours time limit. So even after 3:30 or maybe after 5 o'clock or 6 o'clock, you can have the option to trade on the platform, and brokers give the facility to trade for 24/7 or 24/5 to round the clock in the platforms. So the next one is the leverage. Other very important point to be noted here. because leverage is also a bit considered as one of the biggest a key point to trading in forex markets. So leverage is very high in forex markets. When I compare to a forex market, stock markets, the leverage is very low. Let me explain what is leverage. Obviously, some people understand, some traders will understand what is leverage or margin. But let me give you a small intro about that. So leverage is a trading, is a tool that enables the investor to control large portion with a smaller amount of money. For example, you are going to buy a stock, or maybe you're going to buy a value of under €1,000 or under $1,000 of quantity. Instead of buying under 1,000 of equal amount, you're going to buy only the margin money or margin amount of to buy. That is called leverage. That means your percentage of the margin or the investment is going to be reduced multiple times. So basically, to be in a simple way, the brokers provide the leverage. For example, there are different ratios of leverage they provide by the brokers. So significantly to increase the size of the volume. For example, instead of going with I can give a small example. Take in a commodity in a gold. Gold, if you want to buy 1 kilo of gold, it costs you something like $30,000, $50,000. I'm giving an example here. So instead of going with a 1 kg of gold, obviously, if you want to buy in your merchant from the gold shop or jewelry shop, you need to pay the full amount to buy the particular quantity of gold of 1 kilo. When you're coming to online trading or a margin trading, a leverage trading platform, instead of giving about like $30,000 or $50,000 of equal amount of the gold quantity, you're going to pay only $1,000 or $1,500, depending on the leverage and the margin facility given by the broker. So this facility and the profit also equal to the amount which you have been bought. That means the total value of the amount will be there. To be consider that the risk also based on that either side. Profit, you make the double, multiple, and time you get the loss, it will be also be multiple. So you make sure that you're aware of this information when you take. But leverage is always high in coming to the forex market. Let's consider like $1,000. If you're investing $1,000 and you're holding the net worth of $10,000, that's what the equal about. So for example, like if you're making a profit of if a market moved 40%, so you make $4,000. And same way, when a market moves against you, you lose $4,000. This is a simple way to understand. So this is what exactly the leverage plays also one of the important key point to consider in forex trading. And coming to the stock market, it will be lower because only derivative has this option when coming to the trading. Those who have been trading, they may understand about what is a future market options or maybe derivatives trading. They have this, but ultimately, like forex has a more leverage. So next one is that like, but commonly leverage while used in all financial markets, more on forex markets compared to the stocks. So the best leverage we can say, which is like 1:50, 1:100, 1:200, all of the one of the best leverage. When you start trading with a broker, we'll understand what kind of leverage it is, how to understand the leverage. Because for the beginners, always keeping a lower leverage gives you some kind of understanding, which also gives you some experience to trade, how to trade in the forex markets. When the higher the leverage, higher the risk normally happens. So that's what the suggestion I can give on a leverage basis. When it comes to the volatility, obviously high in forex markets and stock markets, it's depend on how the particular stocks moves, how the particular stocks and shares moves on the particular certain impact on the markets. So when you say about volatility, another key difference is the volatility. It's one terms is that we can say it's a variation of the price trading asset over the time. That's what. So for forex market, the price can be dramatically changed in a minute or within seconds. You can see a fraction of minute and fraction of seconds. We can see a big change in the markets. So this characteristics is almost primarily due to the global nature. Forex market has the economic news that directly influence the currencies directly. For example, any data comes. For example, I'll give an example like unemployment data is going to release in particular time. Obviously, it comes in the evening time for the US markets. When the news release, within a seconds or within a fraction of seconds, we can see a big movement happens in the markets, obviously. So economic indicators also on geopolitical development, or we can say sentiment as market sentiments, that also significant price movement of this. So volatility is very high in case of forex market. Other hand, we can say about stock market, which is also depends on type of stock which you choose. Generally, if you choose like a blue chips companies or major stock value companies, principally it depends on the financial stability of the companies, or we can say more stability on which report comes out of the particular stocks. So that depends on that. So the particular point of time, the volume period. But in volatility compared to the forex markets, always high. As I said, there are $7 trillion of volume. It's there already. As a liquidity, we can see that $7 trillion daily trading volume will be there. So compared to the stock markets. So liquidity is also referred as one of the quickly and easily asset, because you buy and sell in any market without causing any situation price movement. For example, you have the enough liquidity, the executions of the trade. For example, you buy something, so you should have that much enough volume to execute your trades. So when you have liquidity, high liquidity, obviously your orders will be high, and your market momentum is high, the profit yield is high, and your fast execution. That means any investors or traders, you try to choose a different type of trading. For example, there is a short-term traders, and day trader will be there. Even there are traders with scalping. They try to come out with a few minutes. So that is possible with forex trading compared to stock trading. But stock trading will take a few time period to react in the market. For example, you bought something, you sold something, so it will take some time to move in the market. But in case of forex markets, it's very highly volatile. The momentum is very high, ups and downs. So that will take advantage on this. As I said, like there's a $7 trillion of volume in the market. Obviously, it immunes the volume, the currency trading, which allows quick and large volume trades with minimal price changes. So this is a major advantage of forex trading. Particularly, it's benefit for the traders who want move large sum of quickly and to take frequent trading. It's fast trading. So they have time like 1 hour, 2 hours span to spend the trading, if the evening hours or something like. So they can sit for 1 or 2 hours and do the trade, and they can come out easily. So not to wait for longer hours to wait for the profits to come or something like that. So this is a major thing with TEEP, which is about the liquidity on comparing with the forex and stock markets. All right, let's move on the influence of the markets. Already we discussed about how the impact happens here. Primarily influenced by international economic trends and political changes. As I said, like economic data, political change, or we can say any central bank impact will be always a major factor that the markets move the markets. So that is one of the major things we can say. When you compare to stock markets, as you said, the company's performance, industrial performance, macroeconomic factors, and market sentiment, that's as the stock markets moment. Sometimes we don't have the reports on daily basis, obviously, because the company reports comes 2 weeks once, a monthly once report comes. So by the time the market will be more consolidated, silent. But when it coming to the forex market, obviously, then and there will be a lot of, because it's around the clock, because any news can affect the market, because there is a start with the Australian markets, there is Japanese markets, and coming up Asian market like Chinese and India, then later on come to the European markets, then come to the British in London market, then the US market. So around the clock, there will be some kind of news will be there, will be flashing out. So it depends on the news and impact, the market will keep on fluctuating. So you get the opportunities and potentialities there always in the forex markets compared to the stocks. So next, the final one is the cost. Obviously, the most important thing, the cost is nothing but in a forex markets, it's a spread. You should understand what is spread. To be honest, it speaks, forex brokers make money when the spread. That's a yield for them from the broker. So spread is nothing but you execute the trade. For example, spread is nothing but difference between the buying price and selling price. Any market platform has a buying that normally we say in international markets like a bid and ask. So this difference is called a spread. So the brokers make money only with the spreads. There's no any additional charges, something like that. Depends unless you have a certain product you define to trade on that. But when you come into the stock market, some brokers had charge spreads plus commissions, obviously. Additionally, in some countries, the purchasing stocks is subject to the stamp duties, tax, and everything stuff in that. So this is all the major, because when you trade something, you're supposed to have a minimal cost to your trading so that you can doesn't lose your profit. So this fees are for the stock markets, and maybe for a minor consideration for the huge volume traders, the huge amount of traders and capitals they are trading. But when nevertheless coming to the beginners and new traders, basically the fee which really damage the profit. Suppose you made like $100 and you pay like 30, $40 to the fee or something to that. So remaining you get only 50 to 40, 50, 60%, something like. So this is also a major consideration because how much time you spend, how much a day you spend for the trading, that impact. So choose wisely on your side, which is your, or you diversify your investment from the stocks to the forex, which is comparatively healthy for you to understand it. So these are major key factors that to comparison how to show forex market and stock markets exactly, right? So let's move on to the next, how to like choose a broker. That's the next point, because when you understand the stocks and forex, okay, fine, you understand how the forex impact, what are the currencies involved, and also like you should understand the commodities as well in the market, because after the currencies there is commodities tradings or platform, the products are available to trade. There are like three major commodities, we can say: metals, agriculture, energies. You get an opportunity to trade in all the commodities, and major very volatile commodities and popular commodities, you can say that gold and silver, obviously. And there are other commodities like platinum, palladium, or you can say copper, and many ferrous and non-ferrous metals available. Coming to the agriculture, there are like coffee, cotton, you can say orange juice, soya, or we can say wheat, rice, anything. All commodities be traded in the online markets, and that also can get the opportunity. Suppose you're familiar with particular commodities and you know how the markets impact on the overall supply and demand, you get an opportunity to trade in online. And exactly, and same thing which it allows to trade in margin. Instead of paying a total value, you take the chance of opportunity to get into a smaller margin of leverage margin to trade on it. And next is the higher, more popular commodities like energy. Obviously, like there is US oil, normally we say WTI, or you can say UK, which is the Brent oil. You can say natural gas. So these are the energies available. So commodity also available for you to trade, the opportunity when you're coming to the online trading. All right, now how to choose a broker. So you all the information how to choose a broker here. So I'll brush up fast like how to understand in a quick way, like as a beginner or a new trader or experienced trader, like I want to diversify my investment, how to choose a broker here. So the best part is the regulations. You have to look into a broker which has a proper regulator. So we can say one of the best and the top leading broking license, I mean regulations in the U and in forex industry is that FCA, which is called Financial Conduct Authority, where are the one of the, like what you have in India, right? The SEBI. The same way, FCA is one of the topmost regulations in a forex broking industries. Next, we can say Australian Securities and Investment Commission, ASIC. And third, we can say Cyprus Securities and Exchange Commissions, CISCS. And you can say in Emirates, in UAE, we can say Emirates Security and Commodities Authority, which is called ESCA, we normally say. And we can say ADGM is there, which is called Abu Dhabi Global Markets Regulations. And we can say next is Financial Service Commission of Mauritius, which is FSC. So these are major. Apart from there are other regulations, but considering a broker, either you should have a couple of regulations should be there with the broker, so that you're more secure on your fund, and you're secure of your transactions and transparency there with the broker. This is the first more thing to be considered when you're choosing the broker. So next one is that like varieties of markets. So a broker, a platform, a trading platform should have all kind of product to be available to trade, the facility to trade in all the products. First is currencies, as I said, and comparing with the major currencies, minor currencies, you can say about exotic currencies to be available to the traders. Next, commodities, as we discussed, as obviously gold and silver and energy product will be available in the platforms. Indexes, like obviously we don't get India is a closed banking system, so we don't get available of BSE and NSE. We have a different platform for that. But coming to the global markets, you can trade in US market. The main advantage of the trading and stock Indian markets and US market is that because the Indian market times close at 3:30, right? So after that, there's a gap between that, and the market opens back again 9:45 again next day morning. So within the time limit, there is a huge US market trading is happening. So anything happens in the US market, that impact on the next day morning for the Indian traders. For example, the market has a gap up, gap down. So when you have the international platform to understand how the market impact, so traders can able to hedge the position. For example, we have bought something in Indian market and you can see some crash happen or market's been downside against its positions on the US stock markets. So you can able to hedge so that you can able to do the hedging kind of strategy to avoid, to control his risk. So, and you can understand how the market is going to be for the next day when the market opens in India. So this helps us to understand, and this is also one of the key point how the market is going to impact on the next day market opens. So this helps us. So index is also one of the key platform or product where clients can understand, traders can understand the Dow Jones, S&Ps, Nasdaq. These are major US markets, even London markets, or we can say DAX or FTSE or something. And shares, obviously, you get all international stocks on shares product available for the trading in a kind of platforms. You can see more than 5,000, 6,000 shares and stocks will be available to get the facility to trade on this. And cryptocurrencies, obviously, you get a platform to trade on crypto, obviously, like major cryptos or Bitcoin, BTC, or Ethereum. These are the major things. You get a platform. So choosing your variety of markets in a single platform, that helps to choose which brokers and which platform to be considered. So next key point is that platform trading tools. So obviously, when you're coming to the international trading, the more popular, I can say, three platforms. One is like MetaTrader 4. So it's one of the user-friendly, very user-friendly, which can be used in a desktop, or maybe you can use in your mobile app or any kind of device. You can use it for the access to place orders. And MT5 is one of the next platform. There's not much difference between MT4 and MT5. There's all both come from the same brand, which MetaQuotes, but some small features depend on the type of traders they are, because in trading world there are many kind of type of traders are there. Those who trade manually, those who do trade automated, or those who like to go with some type of copy trading. So many are there, like, so depends on the requirement, they choose the platforms, so they can do. So next one is that like CTrader is one of the popular, and mostly like professional traders also use CTrader platform, because compared to MT4 MT5, more features also available in the CTrader. So this way, like, you can choose a platform. The broker has the facilities, which broker has this kind of platform, which help you to trade. Because when you have a proper platform, because the platform is one of the major connectivity for the trading, right? Because if you don't have proper platform, it's very difficult for you to trade, and you get glitches on the platform. It's got freeze or something. It's a very major issues for you when you place your trades. You miss your profits, or you missed close your losses, something like that. So platform is very important. Choosing a platform is a wise decisions to once to start with trading with any foreign or any global markets platforms. So let's move on to the next. As I said, leverage is one of the major key factors. As a beginner, always look into lower leverage, because you need to test the potentiality, how the risk involved in it, what is the potential of the markets, how you could react. So this is the most important to be considered. So don't ever jump with a bigger like kind of things comes out from the different way, that giving high leverage or something like that. Always go in a slower and steady way, because experience make you perfect. So start with the lower leverage, then increase on your practice and move on to the next leverage. And a standard leverage is 1:200. That's a perfect leverage for a one to be trading to be experienced in a proper way of to output to come out of it. So leverage also plays a major roles. We can consider that. And next one is, we can say, the commission spread. Obviously, as I said, like, spreads is one of the major income or yield for the any broker for foreign trading broking, I mean forex companies. So you can choose which kind of spreads you would like to be, but standard spreads always are best, because when you go for the lower spreads, there are different types of accounts will be there for different brokers. But choosing a right spreads, which also will cut your cost, reduce your for example, the profits, cut your profits. I mean, if you have charged for higher spread or higher commission, something, choose a proper and correct broker to choose on the spreads. And the next one is deposit and withdrawals, the most important thing. As you know, like many brokers that we take for ICMs, we are multi-regulated brokers. We have been established in many countries and many locationally we regulated. So we facilitated for our clients based on their region. So there we have a facility to do a funding on a local deposits, and we have facility for them to facilitate it on a quick way of fast and quick way of method of deposit. So this help us. So try to find out the broker which has a facilities from your own region, where because when you come into the international market, obviously there are the opportunities are more and methods are very high, kind of features are there for the deposit. So choose a broker which has these facilities, how you can facilitate the trading, transfer the money to receive the money. So how fast you send the money, how fast you receive the money, that's the most important thing. That gives the reputation of the broker. So choose wisely which broker, how it exactly works. And as per the ICM, obviously we have all the facilities for the for our clients. We are facilitated entirely globally for each and every client in a different play of method of payments, very easily considered to be a faster way of deposit and withdrawals. Next, customer support. Obviously you should have a proper connectivity or support to get help desk for you, because that helps you very important, because you have a platform still, you may need some kind of help or support from the department, the customer support. So make sure that the support is there. So obviously ICM has a 24/5 support, and which helps to give you the any kind of queries or any kind of help from our side. And next is live chat. Obviously, ICM has a live chat to contact the office of working hours, where you can be able to get your doubts, or in case you forget your password, to get help on how to download the platform, or you want to understand something about some products. So there's a live chat available always to help you to understand up. And coming to dedicated relationship manager, she will always have a RM for you, the relationship manager who can help a quick support to you. For example, where you can't be able to understand sometimes, but still you can get a quick support to understand about the products, how to understand the profits, how to understand the risk involved in it, how to understand the platform, or how you understand the market's news when the market comes here, how to understand like to impact the markets, to give some more infos and market insight or something. So this is a very important things, where you have to choose how to choose a proper customer support which are available for you to on a daily basis and access. And the final one is that educational tool. This is also most important for beginners as well as for traders, experienced trader, because this one of the key point, you have a good broker, you have financial payment solutions for your deposit withdrawal, you have excellent we can say platform to trade, and you have excellent support to a dedicated manager available for you. But how to choose them, how to analyze the market, how to take a call, how to take a decision of trading basically. So this helps you to understand. So education tool is one of the best, because as I think we always provide you like seminars, like kind of things. It is a basic about for any investor to understand the stocks and market. Likewise, we regularly have a different kind of various kind of webinars and seminars to educate our client from the basic, for the beginners, or maybe from the advanced trainers, traders who want to understand. And also we give a lot of market insights with a regular basis to the clients. For example, like how the market's going to be before the European markets. As I said, it's around the clock. So the markets start from the Wellington, New Zealand markets, then Australian markets, then Asian markets, then European markets, then London market, then US markets. So within the time we can able to, we provided two kind of market insights. How market's going to be there before the European markets. Now, how is the market's going to be before the US markets? So this kind of reports and market insight we provide, and this helps the traders to take some kind of support. It's not 100% accuracy or something, but still you need some kind of some kind of basic needs about knowledge about the market. So this is a major important thing, like education tool, which normally ICM does, and we can also get information from there. You can learn from there, and we'll also teach you and then and there. And one-to-one, if you want any information, our team always there to help you to find out other things and everything. So this is all about today. And when you're talking about today, the major topic what we were discussing that about how to choose a forex, forex trading. So the major thing is like flexibility. That's the fast place trading. That means you quickly place orders within 24 hours anytime. Yeah, these are major things, because That's most important because the markets keep have a dynamic movement will be there in the market to take any actions. So even if you're a trader or you have own job or you or have your own business, you don't get much time on your busy schedule. So you have enough time after evening time because that's the most volatile market will be there. You can take a decision. This is one of the major consideration for the forex trading. Still, I consider the stock trading, but stock trading can be a diversifications from the forex trading. So you have a time durations, we can trade on it. So when coming to next one is a high tolerance traders. Basically, like you get high leverage for a trading, right? Instead of going with a fuller amount, so you can go with the partial amount, I mean the margin amount to trade. But considering that because the fast plays in trading and fast movement happening in the market, to be considered a very high risk management to be maintained, because we also train our client on a strategy, I mean risk management, how to take risk management, what strategy to be followed, what is technical indicators, tools and stuff, what are fundamentals. And also we give information about how to understand the trading psychology, one of the major impact on any trading, so how the trading psychology. So this all helps us to that. So this is also a high tolerance trade happens in the forex markets. And then it's a global market basically. So as we said that it's impact interest from the global politics, economics to understand. So obviously this platform is also international events, and it's a complete a global announcement happens. So you trade in a higher way of global markets to understand the trades. So these are the major comparison on coming to the forex markets. So I like to share few information of the time allotted today. So this, I hope this you are enjoyed. And when you coming to ICM, as you know, that is from 2009, it's established from London. We have all the product currencies, commodities, indexes, CFDs, futures, and cryptocurrencies. We have a provider platform, MT4, MT5, CTrader, and ICM securities. We do have, and we coming to our products. We have all currencies, commodities, like civil liabilities. We have where we can have like it's civil liabilities, like an insurance protector for your trading account. And we have all the platform. It's all award-winning platform: MT4, MT5, CTrader, and ICM securities. Fast and execute offer about funding and withdrawal options available, and it's available for the region-wise, where we have made already best facilities for our traders. And we have MAMPAM is obviously for the fund managers, best executions we have in our ICMs. So this is all about today, and I hope you all enjoyed. And soon I'll meet you in the next webinar. If you have any doubts or any clarification, you write your question. I'm happy to help you for a couple of minutes. Yeah, there's a gentleman asked one question. Is a forex really profitable? Yes, I can answer this. See, trading forex can be profitable, but generally requires trading skills and experience. That's most important thing, because when you do a fund trading, obviously in a forex markets, you should approach very caution. You should do realistic expectations, because practice make you perfect. So make yourself understand the product, understand the platform, understand the risk involved in the trading. Then definitely you can gradually, slowly, you can consider to take it forward to the higher investment. Before you start, always we have a facility to get you on demo trading, where you can do the practice. And the demo trading, you can understand everything about the demo trading itself. You get an insight about the markets, trading in a live atmosphere, virtual amount available, what is the risk you to take. So everything has been possible to understand. So this is a more important thing to be considered. Yeah, there's one more question. What do I need to start trading forex or stock markets? Well, nice question. That's a topic today. Before you begin, you need to gain a solid understanding about the market fundamentals and trading strategy. Yeah, that's most any market. See, any market is risk. Stocks or forex markets, always a risk involved in that. Then you have to open a brokerage account, and with a broker that suits your trading goals. That's most important thing, and offers necessary tools and resources. As I discussed, how to choose a broker. You have to choose as per your convenience and your requirement. Then you can start with the demo. Then you start with the initial capital. Then depends on your trading approach and market chose, and you can probably increase your trading investments gradually, and you will enjoy the trading, obviously, because the major important thing to understand the market's sentiments and fundamental things. So unless then, it's very difficult to get into, and definitely markets as some kind of factors. So you should understand all those things. So definitely we have that to help you, and IZM can help you on that. And we already regularly having kind of informations regularly. We providing seminars and stuff for our clients on that. Thank you. All right, that's for today. Thank you so much for everyone. Hope everyone enjoyed, and catch you soon with another webinar. Thank you so much. Take care. Bye bye.